Thank you very much. Welcome to the Halftime Report. I am Courtney Reagan in today for Scott Wapner. Front and center this hour, the summer setup for stocks as we kick off a new trading month. The investment committee is standing by, of course, with their playbooks as always. So joining me for the hour today, we have Joe Terranova, Steve Weiss, Jim Leventhal, and Bryn Talkington. Let's get you a quick check on the market here on this first trading day of the month of June. The Dow Jones Industrials are the laggard here on the session, down about 0.4%. S&P 500, though, just almost marginally negative here, and the Nasdaq Composite leading the way higher by 0.2%. And of course, over the weekend, just domination of tariff headlines and officials talking on different shows, trying to figure out where we are with China or where we aren't with China, I suppose. Jim, I want to start with you because I know you've been watching a lot of headlines in geopolitics, not just tariffs. It's got you a little concerned despite the markets generally shaking it off right now.
Yeah, I've said for some time, Courtney, by the way, welcome. Good to be here with you. I've said for some time that trade policy uncertainty is the biggest thing facing the market. Well, this weekend, geopolitics said, I'd like a word. And there's some things that happened this weekend that are pretty dramatic. The Ukraine strike on the Russian air bases is one hell of a blow. And I think we got to be careful here. Now, I'm not pushing the panic button. I don't want anybody watching to feel that the panic button is being pushed. What I am saying is this would be a good time for geopolitical hostilities to ratchet down, not further upward. It's not just the Russian-Ukrainian strike. It's the comments that Peter Hegseth was making on Friday. That's the Secretary of Defense regarding China imminently being prepared to do something about Taiwan. And then there's the ongoing intractable situation between Hamas and Israel Israel getting more and more concerned that the U.S. is going to make a deal with Iran that is going to allow Iran to eventually get a bomb, which to Israel is unacceptable. So there's a lot of geopolitical hostilities here that we would like to see ratcheted down. There is maybe, Courtney, going to be a talk between Presidents Xi and Trump. That would be a step in the right direction. I'd like to look for that. In the meantime, it is still trade policy uncertainty. I don't want to lose sight of that. We've got 1 month more or less until the pause on reciprocal tariffs goes away. We need to see some trade deals come through before those reciprocal tariffs come back in force.
Yeah. Go ahead, Joe.
The market's trading pretty well, though. Despite that trade news, we've got a lot of resiliency. 3 weeks ago, coming off of the Geneva trade and economic meeting between the Chinese and the U.S., market gapped up higher from 56.91 to somewhere around 57.67. Since then, we've been in a range, 58.30 to 59.68. That's what we're doing. We continue to see stocks making 52-week highs. You look at the S&P 500, I think there's 15 of them today making a new 52-week high. 52-week lows, only 4 today. So you have momentum right now is a very strong factor. And what's interesting about it is it's not in the normal places. We're not sitting here talking about, oh, Apple's making a new 52-week high or Alphabet's making a new 52-week high. It's names that we really haven't spoken much about over the last several years. It's names like Zscaler and Spotify and Palantir and Netflix and Rollins and CME and Chewy and Hood and Howmet. These are the stocks that are moving the markets higher. You have equal weighting working once again. And logically, you say to yourself, OK, we've had a remarkable run from the April lows. It would make sense that the market now would maybe moderate those gains and correct at some point. I wouldn't be surprised to see that. But you have to have the market dictate to you that that's actually what's going to unfold, and I just don't see that in the near term.
Yeah, there's so many cross currents going on right now, Weiss, and it does seem like we were reactive to tariff headlines in March, April, maybe less so in May, because the S&P 500 and NASDAQ both coming off their best months since November of 2023. The leadership is changing. What's your playbook right now to manage through the cross currents?
Yeah, so yeah, we had a great month, and we just barely in the S&P, not so in the others, covered the losses that we had. So it's kind of, so you can't look at one data point and say the market's been great. It actually hasn't. It's bounced back significantly since the lows. In terms of, I agree with everything Jim said. I mean, you've got heightened issues across the globe. I don't know if you mentioned Poland or not, but that's another one to throw in there.
Sure.
Because we don't know what happens now with Poland and Ukraine, Poland and Russia, right? Poland, in my mind, they'd be insane to not support the war in Ukraine. And in fact, the person who won the presidential election has historically been supportive of it, but now there's a question because they're next, right? They're on the board of Ukraine. Look, we're sort of immune to the tariff noise at this point because of taco, right? Because it always comes back and everybody's not getting worked. Nobody's really getting worked up about the 50%. It's positive for Cleveland Cliffs if it happens, but who knows? Tomorrow it could be 10% or it could be us paying them to export here. So you just don't know. But what you do know is that the market has done well. It has momentum. The places to be that I think are defensive continue to be, and where most of my portfolio is in big cap tech. It's not in Apple, though, because of their unique China issues. But I still think that that's the most defensive place to be. Healthcare typically defensive. It had the worst month last month, right? So all bets are off there. Every part of healthcare is up for grabs.
A lot of that, though, is because of UNH and Eli Lilly. That's 20% of the healthcare.
It's also up about Medicaid. It's also down about
I'm saying
Medicaid.
When you look at the performance of healthcare.
Yes, no, agreed.
Yeah.
But I'm just saying that it's not a safe place to be. So
it's an interesting position that you're taking because Roth Capital thinks tech's losing momentum. The new money is focusing on defensive. JP Morgan thinks there's going to be a leadership change. They're not all in on the Magnificent Seven.
Right. And I'm not all in on them. As I said, not Apple.
Not Apple.
Okay. Google, I think it's actually okay here, but to me it's Meta. To me it's Netflix, which is not part of Max 7, so that's where there's a leadership change.
Okay.
But to me, they've got defensible moats. They could be taxed 10%, as talk is around the world. We just tax these tech companies 10%. Bottom line is that's where you want to be. As far as the rest of the market, it's just way, way too tough. And anybody who can be sanguine about this market going forward, when you've got valuation levels that are where they were a year ago, where you didn't have a lot of this nonsense, you can't tell me why reasonably that the market should be valued. And keep in mind the chorus of people saying that we were overvalued then, due for a correction. Now that's on steroids. So just throw a number out there. If you're putting all the things that Jim talked about, some things I've talked about, some things Joe mentioned into the market, to me maybe the multiple is 26 times. You're seeing a record cut in earnings estimates, and I'm just throwing it out there to make a statement, not to say it's the actual multiple. So look, I'm not adding here unless you get phenomenal opportunities in certain names. I just think that you want to wait and see.
Jim, jump in before we grab Brent.
There's one saving grace here, which has to be acknowledged, which is the strength of the labor market. Because I understand, Steve, and unfortunately agree with a great deal of what you have, kind of, for lack of a better word, your negativity.
Right.
Right. I mean,
cautiousness, not so much
whatever word we want to use. But what has not happened so far, and this is really important, is that companies have not been laying people off. Let me be a little more specific on that. Small businesses are having a hard time. If you read the Fed Beige Book, small businesses, particularly in manufacturing, are laboring to maintain profitability in light of higher costs of raw goods because of the tariffs. But large companies are not laying people off. We're going to have an important tell on this on Friday, but so far the initial weekly jobless claims are hanging in there. This is important because it's allowing GDP to continue to expand. Now, the Atlanta Fed GDP has a lot of net export, net import noise in it, but still, consumption is growing. That's the biggest part of the economy. And until we see initial weekly jobless claims start to spike, then it looks like we can get through all of what Steve and I are talking about.
That's not part of my thesis, by the way. And it is cautious, and there's a big difference between negative and cautious. And that's because the cost to recruit, to rehire, they went through that in the pandemic.
Agreed.
They don't want to go through it again. So that's going to be the last to go. Cap spending, CapEx, which is a big part of GDP also, is the first to go. And we're seeing that already. If you talk to CEOs, they're frozen.
I mean, Brent, it's very interesting. Eddie Ordeni sort of makes this point in saying the economy remarkably resilient, really, despite sort of everything that's happening with Trump's policy or potential policy that we're hearing from. I am, though, to the point that's being made on the desk, starting to worry about jobs. Obviously, you all know that I cover retail as a reporter for the network, and so I'm really thinking about how they're going to manage the costs. And look, if a cost goes up here, one way to lower costs somewhere else is to cut some of your labor pool. What are your thoughts generally on where we're starting the month of May when we're trying to balance month of June rather, as we're trying to balance all of this?
Well, May was the best year for the S&P in 35 years. And obviously April was probably one of the worst. So they do balance each other out, as Steve said. I think as it relates to retail, where you have to be careful is you see Abercrombie had great numbers, yet Macy's is closing 150 stores. So I think retail has its own retail issues and is not a broad depiction of the jobs market writ large, I think the jobs market's going to remain strong. It's going to remain strong, and we're a consumption economy. We're a service economy, and so we have so much resilience. And really, there hasn't been much change. We keep talking about all these tariffs, et cetera, but really we haven't seen a lot of implementation. I think as it relates to like, how do you play this market? We're in this, let's say 5750 on the low, 6,000 on the high. We couldn't, punch through that. And so now we're in this middle ground. I think what's interesting though, is you have, certain stocks and sectors are below their 200-day moving average, like an Apple, a Google, Joe's point on healthcare. You've got energy, and so I think you need to be mindful of those sectors and securities. Salesforce is below the 200-day, of being mindful of that ceiling, versus if we get a little pullback, you have technology, you have the financials, you've got so many stocks above that 200-day, and so from a buy the dip mentality, I think you want to stick with those stocks that have punched through that 200-day and buy the dip if you see them come down, and still like fade those names that are underneath the 200-day, because I think that's going to continue for the summer at least.
We've been talking about cautiousness or negativity, Brendan. JP Morgan's Jamie Dimon, of course, made some comments on Friday with our Morgan Brennan, and he's worried about cracks in the bond market, basically saying it's going to happen. And when it happens, you're going to panic. That's what he says he's telling the regulators. I mean, we listen when this man speaks, right? What do you make of this commentary? We focus obviously so much on equities, but the bond market has really dictated a lot of what's playing out sort of writ large in the economy.
Yeah, well, I think he probably echoes what Rand Paul, Ron Johnson, also believe. And so he did say 6 months or 6 years. And I do think we're all concerned about, from both sides, this unregulated spending and the lack of cuts. Because growth, if we get GDP growth at 3%, that's great, but it's a big if. And so I do think as Congress is coming back today to talk about this bill, you're going to have, once again, Rand Paul, Ron Johnson, 4 other senators on the Republican side all pushing back saying, hold on a minute. And so I think that's going to start taking front stage. And that I believe that they are going to, like Jamie Dimon, continue to have that narrative, that drumbeat of we have to have some semblance of fiscal responsibility, because a 3% GDP is a maybe, not a certainty.
There's 2 things that you have to concern yourself when you're thinking about asset allocation and what sectors you want to go into for a portfolio. First of all, the market still wants growth. I'm talking about there being dispersion where an equal-weighted strategy can actually work, but that's not to say that the value names are working so far year to date. S&P value is down. The market wants growth, and it wants growth in sectors like industrials, like financials. Utilities are the leading sector year to date in an environment where yields are actually moving higher. Why is that? Because there are some utilities that are experiencing growth from the data center demand as it relates to AI itself. So I don't think you trade down. I don't think you look at an equity size class like small caps. I think you stay high up, mid caps, large caps. And if you find a company that's able to deliver growth in this environment where it's clear to me the biggest challenge, I don't know if you guys agree or Brynif agrees with this, but I don't think the concern really should be so much about inflation in front of us. I think it's growth. I think growth is the biggest concern. And let's remember something, earnings were good. And as you look forward, you say to yourself, okay, what's the margin compression ultimately going to be if, in fact, my concern is about growth and economic conditions deteriorate further?
Which, Joe, it all leads back to trade policy uncertainty. I agree with you, but we're not enjoying the benefits of what is a lowering inflation environment. The Fed can't cut until it sees the impact of tariffs. Said it won't, okay? And right now it's projecting, or the market's projecting, that September is the first cut. That's if we get all this tariff worked out. The Fed needs to see what the tariff levels are, and it's for this reason. This month, the month of June, is critical to get these trade deals in place. Steve, I can kind of hear you. Forgive me, I'm putting words in your mouth, but I'm pretty sure I'm accurate. You're going to say these trade deals are a bunch of hooey, and I'm going to agree with you. But nonetheless, get it done with, move on. That's what we need to do.
But I'm not suggesting that I need the Federal Reserve to save profitability and earnings, and I also think, put the nonsense as it relates to tariffs and the mercurial nature of the way this is being implemented off to the side for a second, because there are companies that have the ability to still grow in that very uncertain environment. And that's what I'm speaking towards, trying to identify what those companies are. I don't think it's universally where you say to yourself, oh, the entire S&P 500 is going to be challenged because this is such a mercurial process.
But Joe, you've got a restrictive, I'll make this really quick, Steve.
Yeah,
you've got a restrictive Fed interest rate environment. It's restrictive. It's factually restrictive. And your point is well made. I'm just adding that if you want the rest of the market, like value, small caps, everything else, to start to participate, you're going to need some Fed rate cuts.
And you're going to need growth.
And you're going to need growth. Let me get in here. First of all, I don't think it's a bunch of hooey. I actually think that the trade discussions are incredibly important because that's what's chilling the CapEx market. It's irresponsible for a CEO to make an investment because he thinks it's going to be another taco trade. How do you allocate billions of dollars based on that? You can't, right? And in terms of inflation, actually does matter, as we've heard what the Fed has said, and inflation bleeds into the other things, the other parts of the market. So, including retail, like who's passing on the cost? The auto stocks again today, back and forth, back and forth.
Why do you think we're not seeing it just yet?
Because I think I've said this many times, the market goes up 80–90% of the time, so we're not seeing it in the market. We are seeing it.
I mean, the inflation. Why do you think we're not seeing the consequence of tariffs being inflation?
I don't know why it's not coming through, but I can tell you that, I know a couple people in this business. There are a few firms that do it, and they've got to write bonds based upon what the projected duty will be. And those bond costs, for example, on retail goods, on steel, on others have gone up tenfold. That money will come from somewhere. So it's only a moment of time that you're not seeing it. Some companies have said, let's just keep business as usual, and then we'll decide what happens. But I wouldn't be lulled into this false sense of security that it's not going to matter. Of course it's going to matter. And investing, as you all know, is composed of not what's happening today, but what's the future going to be. So I'd say, to put rough percentages on it, 75 to 90% of what the future is going to be, and 25 to 10% of what the history was, such as the pedigree of the company. So we don't know what the future is. Anybody who says they do, even from the administration, is out of their mind. So how do you deploy capital? Again, going back to my central question, anybody who's bullish should be able to answer this question. Why are you investing at the current multiple in the market when it was deemed to be overvalued last year by a lot of investors at the end of the year looking to their end of 25, 26 targets to justify it when you've got so many more issues here, apart from the administration, the uncertainty, and apart from geopolitical issues globally, which impact that. So if anybody, I'm throwing that out there, anybody want to answer it?
Let me respond by saying different people are looking at different things, and you could look at the market right now and find things that will give you the confidence to be bullish.
Like FTAI,
let me finish.
Idiosyncratic risk to this market.
So in the near term, you could find things where you get confidence to be bullish and stay bullish for a little bit. But the best investors change their mind. The best traders change their mind when conditions ultimately change. That's what this business is all about. But for me, what I see in front of me right now is that momentum is powering the market higher, and that's probably troublesome to a lot of people who are watching the show who are in the financial services industry, because they do a lot of real fundamental analysis. And if you do the fundamental analysis, there's challenges in front of you. But let's not forget, momentum right now is a powerful force, and it's taking us higher. And I respect your view, and I'm pretty certain, and I'm not disagreeing with you, that you probably think the lows for the year are not in. And that
I have no idea.
And that, in fact, you might revisit them. Yeah, we'll find out.
I mean, Brent, here we are sitting at the halfway point, right? June 2nd. Tom Lee, of course, we know he's very bullish, but he still calls this the most hated rally. He's looking at the S&P 500 to reach 6,600 by year end. We're just above 5,900. What do you think? That's a step too far?
Well, June 1st and December 31st, there's a lot of space between those two, so we'll see. I think it really depends. I think it depends what happens with bonds. I think it depends what's happened with these trade deals. If you go back to 2018, well, first of all, I think the lows are in. I think that April 2nd surprise, that was an exogenous event that it made no sense. Those numbers made no sense. Everyone was like, what is he talking about? And so I think that exogenous event will not repeat itself. And so for that reason, I think the lows are in. I think that, like 2018, we had lots of volatility. We had multiple 5 to 15% drawdowns. And so I do think, though, later on in the year, there's definitely bandwidth for the Fed to cut rates because, once again, to Jim's point, we are very restrictive. And the Fed doesn't need to go into a 1% rate cut. It's like 25, 50. You can start bringing down that level. And so I just think there's a lot of variables that if we hit that 6,600, you're going to have seen a lot of things go into place. I do think the one area that I would say where tariffs are a negative, we really need to start hearing more about the deregulatory nature that the president and Besson, et cetera, are going to implement in the economy. We hear a lot about it, but from when the people I talk to in utilities and infrastructure, everything is still very, to Jamie's point, blue taped, and nothing really has been pushed through. So to me, that's going to be another piece of growth, but it has not even remotely started to happen yet.
Sure, that could sort of remove some handcuffs, definitely, on part of that. I mean, we've talked a little bit about tech and whether or not we think that that's going to lead the way. But if we drill down a little bit further, we've got Broadcom that's going to be reporting on Thursday, and the SMH Semis ETF actually coming off the best month since February of 2024. I know there's Broadcom in the JOT. What are you thinking about ahead of this? Can the semi trade continue right now?
I think it's a mean reversion trade.
Okay.
I'm skeptical somewhat about it because there's been a significant outperformance from software over semis over the last year. We've seen now a narrowing in that outperformance where semis are actually beginning to work. I think certainly I was a little disappointed in the response from NVIDIA after earnings. Not much follow through. We'll see how it trades in the coming weeks. Broadcom is close to a 52-week high. I think it's important for the company really to go out and to underscore the diversified model that they have. It's not just about AI for this company. They've done such a remarkable job. They did an acquisition in 2022 for VMware. That's now accretive. It's working very well. They've got a $10 billion buyback plan that's in place. Let's see what they do with that in the fourth quarter as we look towards next year. So I think right now for semis, and our exposure is isolated to basically two names. It's NVIDIA and it's Broadcom, and what the strategy has been doing has actually been moving away from a lot of the semiconductor names. So that's why I'm greeting this mean reversion recovery rebound with a degree of skepticism. We'll see on the other side of Broadcom. We'll see as we navigate through the third quarter if, in fact, we're able to see semi-equipment names like KLA Corp, Lam Research, Applied Materials continue the rally. And at that point, we build more confidence to reestablish positions.
Joe, I think
I like Taiwan Semi, still like it. Goldman upgraded in Asia today, or put in their conviction list in Asia. It's had buy on it. Now, you have to own the risk of China here.
Right.
But with Vance coming out and saying that, hey, we're going to defend them, don't try anything, adopting a saying from the Shiites saying, you will regret it, this will be like the mother of all, and it should be. So I think that's very necessary to come to the defense, which they had not before. Trump before had said, you know, maybe we don't care. So it's critical. It's one of the cheapest semis out there. It's got some of the fastest growth out there, and they are always capacity constrained. So plus they're putting up plants here. So I still love it, still one of my top positions, but you have to have a strong stomach.
I don't know if Bryn's, real quick, I don't know if Bryn still has Roblox, right. But on the software side, you've got Palantir. Great job with that trade, Bryn. You have Palantir, you have Snowflake making 52-week highs, and obviously I've mentioned Roblox. So I don't want to make the inference that software is breaking down entirely because there are software names that are still working. Sorry, Jimmy.
That's okay, but there is still an overhang in the semis, just going back to the semis.
Yeah, I'm skeptical.
Yep. Yeah. You talked about the NVIDIA price action. Now I'm going to draw an incomplete analogy, which is a couple of weeks ago I was on the Cisco earnings call. And I'll tell you, the earnings were a blowout. The guidance was a blowout. When you listen to analyst questions, we all know this. If you listen to analyst questions on a conference call, you get the zeitgeist. And the zeitgeist from Cisco applies to NVIDIA. It applies to the whole semiconductor space, which is this. the analyst community thinks there's a finite end to all of the AI trade. Okay, we don't know when it is. Cisco, by the way, was very clear. It's years out there. The analysts were like, we're not quite so sure. DeepSeek definitely put that question out there about how long the spending will go on. And unfortunately, the only way to answer that question is the elapse of time. You got to get a few more quarters of all the hyperscalers saying we're spending this much, stop worrying about it. A few more quarters of NVIDIA blowing it out, of Cisco saying, what are you guys worried about? You can only solve that with time.
Well, if you're right on that thesis, go sell utilities, because utilities believe the AI thesis is real.
In case it wasn't clear, so do I.
It was mentioned earlier, and I want to circle back before we lose that train of thought, Weiss, Netflix. It's an area that you've been paring back, but it's actually done very well. So you're just taking some profits there. What's your main thesis? I don't want to lose track of that thread.
Excuse me. I wouldn't say I've been, paring back generally. In fact, I haven't. Netflix was my largest position.
Okay.
It's still right up there as one of my largest positions, but just from portfolio management position. I tend to run large positions. Jimmy runs a concentrated book, about 20 stocks.
25.
25. I'm less than half of that. So when it gets to such a level that it's just, again, irresponsible to keep it at such a level, I see nothing wrong with the company. Matter of fact, I think they've got some of the best growth prospects out there. So it's just a question of portfolio management rather than opining on the fundamentals.
Okay, got it.
Yeah, I was talking about silver doing a catch-up trade. It's breaking out, and I think copper's going to join the party. So FCX for a breakout.
Okay, Jim, you're up next.
Yep. In a lot of these trade deals, the low-hanging fruit is LNG exports, and that's going to play very well to Cheniere Energy.
Weiss?
FTAI Aviation, it's just got, it's a great story. It's done well since the lows. And, I think keeps going. Aviation is one bright spot.
Joe, bring us home.
I mentioned software before, and I got the approval to mention this name from Steve. We don't talk about Box often, but you want to buy Box here. Be nice post-earnings rally. Buy it here around 30.
Thank you all for joining us. That does it today.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Monday, June 2nd, and that was Steve Weiss and a few guests on the halftime report in the first segment of this video. And in this segment, we're going to cover a lot of the stocks that they talked about. In fact, they went over about 16 stocks and ETFs here. I'm going to show you the list. Why are we going to cover them? Well, because it's not a bad idea to, if you're thinking about adding a position in any of the stocks, why not take a look at the technicals, right? Technical analysis is another way to analyze stocks. You can look at the fundamentals. You can look, of course, at the earnings and profit margins and take all the geopolitical stuff into effect. But technicals is kind of an interesting thing because it's going to show you the strength of a trend, for example. There's an AVGO, for example. You're going to see where price reaches prior highs. And I'm using an indicator called the Ichimoku, okay? Ichimoku is a Japanese indicator that was published in the late 1960s, and it's been adopted by many financial institutions. And it helps them to sort of get an idea about where the price levels are in relation to where they were in the past, and where they might be going into the future. This is the only indicator that I'm familiar with that actually has some projections into the future. It's called the cloud itself, right? So Senkospan A and Senkospan B, and it projects 26 periods into the future. So that can kind of give us a little bit of insight. Then it's got its own moving averages, the 9 and the 26 period, and it's got the Chikou span, which is, today's closing price, okay, projected 26 periods ago. If we're looking at a weekly chart, it would be 26 weeks ago. All right, so we're going to look at those stocks, and there's a lot of them right there. Netflix is one of them. You can see Snowflake, Palantir, Cisco, Broadcom. We're going to also take a look at the indices, okay, the index ETFs, basically. We're also going to cover the Mag 7 stocks that everyone likes to know about, what's going on with those stocks. And we're going to look at some of the strongest sectors. And we also have a few member requests like gold miners. Now, this is a good one. Check this one out. Junior Gold Miners ETF. So we're going to cover that one. It was up 6.31% today, by the way. So what else are we going to do? We're also going to take a look right now at FinViz. Through FinViz, we'll look at the heat map in a few seconds as well. So let's get started and let's take a look. It is after the close now. As I'm recording this video, it's currently 4:42 p.m. and it's June 2nd, Monday. Hope you all had a good weekend. It's going to be very hot here in the Northeast this weekend. We're going to hit 90 degrees on Thursday, which is pretty wild. Which is wild. Take a little vacation down to the beach in Cape Cod. I don't know if you guys have ever been there, but it's a beautiful spot. Anyway, let's keep going here. So Dow Jones up 0.08. Not a big move. It was pretty flat. NASDAQ was up 0.67% today. The S&P 500 was up 0.41. You can see it dropped in the morning, and then around 10 a.m. or so, the market started popping there. Russell 2000 was up just 0.31%. So it wasn't like a really big move here for the U.S. stocks, but NASDAQ was the strongest out of the bunch. If we take a look at the advancing versus declining stocks, it's about only 53.5% of the stocks were advancing versus declining. But 79% of stocks are experiencing new highs, which is interesting. And about 69.1% are above the 50-day moving average from the list that they have here in FinViz. And then about 45.2% are above the 200-day moving average. So, with that big decline, obviously it's going to take a little longer for this to start to show some bullishness. And if we look at this what you see right there, that's what that showcases essentially is it's like a voting mechanism, okay? And people can either click bull or bear, and it will give you a percentage. And it says 51% versus 49%. Where will the S&P 500 be in the next 5 minutes? It's kind of funny. All right. Of course, the market's closed. So here's the heat map. And NVIDIA was up 1.67. Broadcom was up. All the semiconductors were in green territory here in the S&P 500. Meta was up 3.62, but Google was down 1.58. Tesla was down 1.09. Microsoft, Apple, Amazon were up. You can see the oil, energy stocks the majority of them did pretty well. Not all of them. Some of the utility stocks were good, but the majority didn't do so well today. And you can see under industrials, there were a few. So it was a very mixed bag in a sense as far as how the markets, the sectors went. Let's actually take a look at those sectors for a moment, because we can look at the one-day performance here. And you'll see that the basic materials, energy, technology were the top ones today, and industrials, real estate, consumer cyclical were, not so great. Okay, let's get into the technicals now. We'll start off with the Dow Jones, and then we'll get into those CNBC stocks. The Dow Jones right now on the weekly charts inside the cloud. So one of the rules of Ichimoku is you don't want to be adding positions when price is inside the cloud or under the cloud. So inside the cloud is kind of like neutral. Neither the bulls nor the bears are in control here. When it's under the cloud, the bears are in control, and they'll push that price as far as they can, right? And then when the bulls are in control, that's when price is above the Ichimoku cloud. Right there, you can see it happened back on March 31st of 2023 on this weekly chart, and it moved up approximately 35% in 1.9 years. It's just in recent, right, since about January or so, where, what was that, January 31st, where it hit the high of 451.34, and then it basically dropped, quite a bit, almost like 20% or so. So now it's recovering. Here's FEZ. FEZ is the Eurostoxx 50 ETF. This, on the other hand, has been looking very strong. Here's the weekly chart, and here's the daily. Okay. And so up 1.25%. You compare that to the Dow or the Russell or the Qs or the SPY, you'll see that, yeah, the European stocks are doing pretty well. IEV is the Europe 350 index. So it's a little bit more expansive. It looks at 350 stocks. And you can see the daily chart has been on a run, a very strong, powerful run. And here's the weekly chart. Very, very powerful. Russell 2000 with Ichimoku is under the Ichimoku cloud, so it's in bearish territory. Technically, it is above the 200-day moving average, that dotted yellow line, but it's under the Kijun-sen, the 26 period. It's under the cloud. And again, remember what I talked about earlier about how the cloud can show us well, when I say show us the future, it's going to project. It's never 100% that, things are going to be bearish, because things can change tomorrow. News catalysts are what make the markets move. But what we can see here is there's weakness in the Russell, and it hasn't really recovered very strongly compared to some of the other indexes. It's only up 0.31%. And the Sigma span A, when that light colored line is under the purple line, like it is right there, that's bearish. And when the white line that you see right there that projects into the past, that's today's closing price, or I'm sorry, that's a weekly chart we're looking at. But that week, if you go back 26 weeks ago, it's under the candle from 26 weeks ago, so that's bearish. And this is what the daily chart looks like. All right, so it's starting to show a little bit of strength on the daily, but we don't have confirmation or confluence on both time frames. Here's the QQQ ETF. This one's on a nice strong uptrend on the daily chart. You can see the Chico span is above the price. You've got a bullish cloud, right? Price is above the 200. It's above everything. But on the weekly chart, you've got a bearish cloud still. In addition to that, the Tengen's in the faster moving average, which is the green line, is under the Kijun-sen, which is the slower line. That's also bearish. Okay, and we're also coming close now to 540.81, a prior high. That's why I've got that trend line right there. How far are we from there? We are about 3.7% away. S&P 500, doing something similar here on the weekly chart. You know, we're about 3% away from the all-time highs there for the S&P 500. So if we can break through that 613.23, then we can expect a progression to the upside from there. But the future cloud is still bearish. Okay, there's still a lot of skepticism in the markets. You heard Steve Weiss, what he said about, the tariff situation is still an issue. It's still out there. There haven't really been any deals that have been accomplished. Okay, so where are we at? I mean, the CEOs of corporations can't really project, going to the future with all these tariffs, basically hanging above them. And then every time that we come close to a expiration of a tariff, we get another extension. Like, okay, we're going to give you some more time to negotiate. But we're talking about the entire world, right? He wants to individually, and we're talking about Donald Trump now, he wants to individually make deals with each country. I just don't, it hasn't happened. He hasn't been able to accomplish that with one country yet. Even the British talks that they had, that didn't materialize into an actual deal on tariffs. So there's nothing getting done, really. I mean, we're in a bad place here, and you can't manipulate the tariffs, go up and down every other week, just change the numbers around and expect the markets to right now they're going up based on momentum, right? And the CEOs are hoping that Trump is going to back down like he has in the past with the tariffs, right? And he's going to back down even more. We'll see if that happens. But he's also being challenged now, right, with the whole taco thing, the memes that you've heard about. Taco standing for Trump always chickens out, right, when it comes to the tariffs, because one day it'd be 130%, the next day it's 30%. There's no rhyme or reason behind that. I don't understand the negotiating tactic there. Can someone explain to me how that makes any sense from a negotiation perspective? No, it's not normal. Basically, this is completely abnormal behavior that we're seeing in the markets because of the tariffs. So, with that said, the VIX though, the volatility is dropping still, so that's good. And that helps to, but if something negative happens here with we're talking about inflation starting to spike, there's a little bit of a delay when it comes to all these tariffs. Why? Because the shipping containers, it takes months for those to come into our ports. Now there's been a delay, of course, as well, right? In those shipments. So we might start seeing all this start to materialize in about a month, 2 months from now. That's my thinking. If he doesn't turn back on the tariffs. All right. And by the way, the tariffs aren't going to pay for everything. It's not going to happen because no one's doing business with us. They're looking for other people to work with. Broadcom, AVGO, coming right back. Now these are all the CNBC stocks that they talked about on the show. So we're going to look at those. Here it is in the weekly chart, coming up to that prior high. and stalling right there this week so far. Here's a daily chart. It was up 2.74%, but I'm always very wary about adding a position when I'm this close to a level of resistance. I talk about that in my membership member videos each weekend. I did one this weekend, so you should consider becoming a member, guys. This is my homepage right here. If you click on basically right here, you can click on and 9 more links, okay, and you scroll down, become a member. You click on that link right there. There's also a $25 coupon for the software that I use, TC2000, right there. You should, if you like the charting software that I'm using, it's great. But if you want to become a member, so you click on that link, it will pop up a little box in a few moments here. Like, it will look like this. And if you want to access those member-only videos, you can become a Blue Cloud Trader level member by joining, or a Blue Cloud Legend level member. You won't get that under Blue Cloud Supporter, but you would be helping the channel if you do become a Blue Cloud Supporter. I do appreciate all the members. And if you do become a Blue Cloud Legend level member, just you'll also get daily trade updates on my trades, which I share. A new tab will pop up here, and it'll say membership. So this is what it looks like to Blue Cloud Legend members. All right, let's get back to the stocks now. BOX is another one. I believe that one was brought up by Joe T. It was one of his final trades at the end of the show, and here it is in the weekly chart. It's experiencing all-time highs. Now this one came out. This stock was came out in 2015. Became public, is what I meant to say. It became public as a stock, and it's been doing pretty well. I mean, since that point right there, it's up about 83.5%. Let's see, Cisco is coming close to 6650 level. How far are we from that target? About 3.57%. So maybe a short-term trade. And here's a daily chart for you. You can see we got a little buy signal there where price popped right back above the moving averages. We've got a bullish cloud, and it's looking pretty good. FCX on the daily chart, that was Brin's recommendation today, June 2nd. But it also was Brin's recommendation back on October 17th. So let's take a look at, let's go back to October 17th and see where price was in relation to the Ichimoku, so we can kind of get a sense, did it make sense from a technical perspective to add a position back on October 17th. And what I did was I created a little box right there. That's October 17th. If I highlight there, you'll see October 17th. Now, I want you to see where price was in relation to the moving averages of Ichimoku. It was under the 9 period. So if price is under any of the moving averages, it's not usually in your best interest to be adding a new position, okay? Now, it stayed under, as you can see right there. Stayed under right there, closed under that green line right there. Stayed under. Then what happened? We had a crossover, a negative crossover, where the faster moving average crossed under the red line. That's bearish. Then what happened? Dropped. It got under the Ichimoku cloud. Now, like I said before, that's also very bearish. And it stayed under. Why? Because that's what happens. The momentum, all right, was negative. And so more and more selling. Now sometimes, but at some point, things might turn around. And you can see here, it continued dropping. It did pop above the cloud temporarily, reached the 200. Okay, that's that dotted yellow line, and then dropped. Boom, some more. So if we measure from here, and there's a measuring tool now, I'm going to basically highlight right there on that candle. And this is where it tells us where we're at now. We're down 16.49% if that's how down she is from that point. I'm guessing that she probably held the position throughout this whole time. However, it's beyond that. If we measure from that point and we go down to the absolute lows here, this ETF, this ETF or stock Freeport McMoran Inc. Copper had dropped about 41.43% in 5.5 months. That's a big drop, and you can see that popping up in that little box there a few seconds ago. So where are we at now? So I can click this little play button, and brings us to the very front here, and this is June 2nd. So right now it's going to retest that 200-day moving average. The last time it came close to the 200-day on that little candle right there, what happened? Price dropped. So I'd wait here. I would not be jumping in on this one. Another reason I wouldn't get into it probably is because this high hasn't been taken out either. You can see that prior high. So it's at a level of resistance right now. So no FCX for me. Not interested at this point, but it's in the beginning stages of looking strong on the daily. But remember, it makes sense to look at the weekly chart too, the longer term chart. And right now, on the weekly, it's bearish. Right? We've got a bearish cloud. There's a Senko Span A under the Senko Span B. Tenkan-sen is under Kijun-sen. Chikou Span is under price. Everything is very bearish. By the way, it wasn't just Bryn that was recommending it. It was also Sarat, one of the other people on the show back on November 4th. It was also Bill Baruch. That was his final trade on January 23rd and February 13th. So, yeah, they got to start looking at the technicals, is what I'm saying. FTAI, Aviation Limited, Industrial Sector, Rental and Leasing Services. Here's the weekly chart. This was Steve Weiss's final trade. Now, this one, he added, he talked about it back on April 14th in a prior show. So let me just show you the daily time frame on this one. So back on April 14th, that was around, let's see, what candle was that? It was this little candle. Now that was under the cloud. He got lucky because it actually moved up from April 14th. It's actually moved up 22.55%. It dropped a little bit from that point. Where was that? April 14th, sorry. Right there. So it did drop a little. It dropped about 14% right after you recommended it. But then it recovered, and now it's up 21% from that call. He recommended it again here on June 2nd. I wouldn't jump in here. Now you can see what's going on from a technical perspective. Price is stalling at the top of the Ichimoku cloud. They call that the Senko Span B. And so the cloud is still, let me see the future cloud on this one. Oh, the future cloud is looking bullish. So Senko Span A is above Senko Span B. So that's what you want to look for, is what does the future, cloud look like? Is the Senko Span A, the lighter colored blue line above the purple one? That's very bullish. However, we've got the 200-day moving average right there. And so I think it's going to probably find some resistance about 4.5% away from where we currently are. How about IVE, which is the S&P 500 Barra Value Index Fund, another ETF they talked about. This one, here it is on the weekly chart inside the cloud, and on the daily, it's under the 200. Not too crazy about this one. IVW is the S&P 500 Growth. Now, this one looks great on the daily chart, based on Ichimoku. On the weekly chart, we've got a bearish cloud, and the faster moving average is under the slow one, but price is moving up these last, I don't know, how many weeks has it been? Since April 11th, it's been moving up. But it's going to come close now to some resistance at 107. That's only 2.7% away. LNG is another stock they talked about, Cheniere Energy. That was Farmer Jim's final trade. I had a position in this stock back on, I added it back on January 14th. I closed out of it 3 days later. I'll show you the daily chart so you can see that. So that was, and I shared that, of course, with members. So you can see all the trades that I place in those videos. If you go back to January 14th, that week, the week, ending January, where that day was, what day was that? Let's see. It was Tuesday. So it would be like 15, 16, 17. It was like the week ending the 17th or 18th or whatever. That's when I added it, and it did move up, and I made a 10.5% profit on that. It formed this reversal candle, which is the reason I got out. And this is what the pattern looks like on a bearish single candle pattern. It's called a shooting star. Long wick, small red body. These tend to lead to declines. Not always, but many times it does. The probability is higher that if price gets under that candle, the low of that candle, that's going to continue dropping. And that is exactly what happened right here. You can see that. Price got under that low. Whoop, and it dropped. And it dropped approximately, let me measure that. 18% in 22 days. So I'm kind of glad that I got out when I did. Now, is this a buy here where we're at? If you look at the daily chart, it's very bullish. Once again, the Tenkan-sen looks like it's about to cross there above the slower moving average, so that's good. The cloud is bullish. Chikou span is above price. So what about the weekly, though? Weekly looks pretty strong, except for the faster moving average being under the slow. That's all. So it's not a perfect chart. It's a good trend. It's not strong, though. Super strong. Netflix is another one. I just actually closed out of this one last week. So I had it back on May 13th, and I closed out here on May 29th. It was a small profit, 5.5% profit. But then the very next day, of course, on Friday, May 30th, it popped right back above. And right now, it looks like we're also getting above these highs. So it's actually giving a nice buy signal right there. So Netflix is looking good. Here's the weekly chart. Okay, very bullish. I'm only picking stocks that are bullish on both time frames, the weekly and the daily. They have to be both. They have to be bullish on both time frames for a higher success ratio in your trades. Okay, you're not going to have 100% win ratio, but you're going to have a much higher, I believe, win ratio when it comes to the trades that you place when you look at both time frames. Palantir is another one that I've had in the past. If I can switch it over here on the weekly chart, it's still very bullish, right? On the daily chart, I added this one on May 30th. I'm just showing this because they did talk about it briefly. So I'm in this one right now. Roblox, and I've had some nice profits in the past, back in April, and back here on February 18th, and all the way back in December. A nice profit of 58.7. That was a nice move right there. So Ichimoku can really help with your trading, guys. RBLX, consider becoming a member. RBLX, look at this. This is a beautiful daily chart. It's kind of, I feel like it's a little bit extended here. I don't know. It's just too strong. I know that if there is such a thing, it's too far away from its equilibrium zone on the weekly chart. Okay, we're approximately, if I measure from that high there to that point, we're about 28.5% away from the moving averages. That's a big move up. It's not often that we get that far away. You'll see here in the past, you can get up here like this one here, and then it pulled back, right over here. It just kind of moves sideways. My point is that it's very rare for it to just keep on going straight up, but you never know. I mean, like here's an instance right here where it was just like 2 weeks where it went straight up, but then you have these big drops. And so that's why if we look at the candles, the Japanese candles, and we put that into play as well, you'll notice that you can get some more information from the actual candlesticks, right? So notice something. The candlesticks are becoming smaller. Okay. So here's a big one, right? Sorry. That candle was a big one. That was a large candle, another large one, then there's another one. Now what's happening? These last 3 weeks, we're getting these smaller candles, smaller and smaller candles, which means that the price is not moving as much anymore. It's almost like there's a lack of momentum here. That's I wouldn't say lack of momentum, but like it's starting to slow down a little bit as far as the price movement. And if you look down below here, the volume is also declining, right? So every week you'll see that there's less people buying this stock, which leads me to believe that there's a higher probability that we're going to see a pullback. And it might be a short-lived pullback, and then we'll see it continue again, but that's why I'd be cautious about adding here. Plus, the stock has negative profit margins. I don't know if fundamentals are important to you. Something I like to look at. The directional movement index does look strong. ADX is still moving up on the weekly. And like I said, the daily still looks really good. But I'd be cautious. And the next earnings are on July 30th for Roblox. Okay, SMH, semiconductor ETF. Here is the weekly chart. It's stuck inside the cloud still. 3 weeks in a row. On the daily chart, it's looking bullish, but it's in a consolidation stage right here. I got to get through these quicker. Snowflake still moving up on the. I'm just going to do daily charts right now. Snowflake is looking pretty good. TSM looks okay on the daily. XLV is under the cloud and under the moving averages. XRT is looking strong on the daily right now. Let's take a look at the Mag 7 real quick. Microsoft is looking strong. Nvidia is looking pretty good here on the daily chart. It popped right back above the Tenkan-sen. We've got a bullish cloud. Google on the daily popped a little bit under the Tenkan-sen, and it's still under the 200 there. Well, although it was above it temporarily on Friday with that little hammer candle, but it did pull back, down 1.58%. Tesla dropping for 2 days in a row under the Tenkan-sen. Not the time to be adding here. Amazon looking stronger, but stalling at that these trend lines here. Apple inside the cloud. Meta looking really strong here with that big candle up 3.62% today. Nice move up. And I believe it also broke and closed above that high right there. Let me see. Yes, it did. And the high there was 662.67. So let's add that in there. Live analysis for you guys. Okay, there's the high. We broke through that. I expect this is going to continue moving up. Kevin Simpson was recommending this back in May. That was a good call on him. And where's the next level of resistance? It's not that far. Actually, it is far. It's far away, which is good. You want it to be far away because that's your target. That's where you should find some resistance. 740.91 is what I'd be looking at. 740.91, and that's a daily chart. And if I measure from where we currently are to this point, it's another 9.33%. I believe that Meta is likely to it's going to come back to that spot. Right now, it's all looking good here on the daily. The weekly might be a different point, but I'm not going to get into that right now. Sectors, okay. Just going to go into some of the strongest ones. Here's gold miners. I talked about this bullish flag. Talked about that last week, guys, and the week before that was forming. And it's now materializing into a nice bullish run up, 6.16. XLF is looking good here on the daily chart. Industrials is looking good on the daily. Consumer staples looking good on the daily chart. Bitcoin pulling back a little bit, but I think there's a good chance that this is also going to pull back up again. It's probably going to, there's a small little, you call these small little pullbacks right there. It's almost like a little pattern, like a little triangle. And once it pops through, I think it could continue moving up. If it breaks under the Kijun-sen, expect more weakness in Bitcoin. Utilities looks good on the daily chart. Consumer communication services looks pretty good. IBIT pulling back also, but look, we get that little bullish candle right there, so that might be a reversal tomorrow in Bitcoin ETF IBIT. GLD, there's that bullish flag pattern that I talked about. Like I said, let me show you guys the thing I talked about these last few weeks. I've been talking about gold. Not to be too concerned here with this little pullback. I think it's a healthy pullback. This is the pattern that we're looking at right now. It's called a continuation bullish flag. Basically, it's a bullish variant. Again, price moving up. Whoops, sorry. Price moves up. Okay, it pulls back, makes a lower high right there, makes a lower low, but the thing about it, it's not like a big drop, it's really a small little drop, and so that's what differentiates a bullish flag from like a potential downtrend. Okay, so that's what we have, and I think that there's potential here for this thing to pop through there. Maybe it could happen tomorrow even, and if it does, expect gold to continue. Remember, there's a reason why gold is doing well in this environment. It's mainly because uncertainty, right? Geopolitical uncertainty, uncertainty about the tariffs, basically. Why would, there's no other reason. And the US dollar is dropping like crazy, right? Let's take a look at the US dollar real quick. There it is. Why is it dropping? Well, you can do some analysis on that, but look at it. It's not looking healthy. It's under the Ichimoku on both the weekly chart time frame and the daily. How about the monthly? Oh boy. Yeah, it just dropped and closed under the, it hasn't closed yet because this month is just forming, but it did close on in April. It closed under, and I believe it looks like it closed under there. Let's see, 27.45. It was just barely right on the cusp of the cloud, but now it's looking like it's going to continue dropping. Yeah, it's not looking healthy. So this is the bearish, this is a bear flag, okay? So this is a perfect example to show you how they materialize, okay? So you've got the drop, all right, but then you might have this little short move up. There's that short move that I was talking about. So there's the bear flag version of this, and it closes under that trend line, all right, and then continues. Boom, boom, boom. That's what you can expect. All right, and then let's look at, so one of our members asked about Ethereum, and so I thought I'd like do a quick analysis on Ethereum. ETH is the ticker symbol. You can see that up there. Let's look at the weekly chart first. So as you can see, this ticker symbol ETH and this ETF itself was incepted on July 26th, 2024. So it's a relatively new ETF, and it's under the Ichimoku cloud right now. It's under the Kijun-sen on the weekly chart. So it's not looking particularly super strong here on the weekly. We've got a bearish cloud. On the daily chart, we did emerge through the Ichimoku cloud. We've got a bullish cloud right now. Chiku span is above price, as you can see right there. And, you know, we've got the faster moving average above the slower one. What we don't have right here is price above the 200 right now. It was there briefly there and there on those two candles, but it was unable to continue. It's consolidating. So once it breaks through this prior high, I think it's got some potential on the daily chart. I'll just throw a trend line right there. Let's find out what the high there is. It's 2581. And so if it can break above and close, we want a closing candle above that 2581. I think that's got some potential. It looks like there's maybe some more resistance there though too. So let me add that one. And that high right there is it's 2706. And you'll notice that there was a gap that took place right there. That becomes a natural level of, you know, resistance, you know, having to break through that gap right there. You can see that from that candle, it dropped to that level. And now it almost kind of looks like it's kind of turning over a little bit here. Let's look at the 2 hour on this one too. You can see that it's kind of entering the cloud. It entered the cloud today, Monday, June 2nd, 10 a.m. And then it's basically staying in here. So this is not the time to be adding positions in ETH, in my opinion. One more ETF to cover here is GDXJ, Market Vectors Junior Gold Miners ETF. This one's doing pretty well. Here's the weekly chart hitting the 65.95 and breaking right through it. So that's what we want to see. Prior levels being broken. That level right there, broken this week with that 6.31% move today in just one day. That happened. It was a really nice candle. Now, if you look at this weekly chart, this is a beautiful chart. You want to see, this is what you're looking for. You're looking for the Senko span A above Senko span B. 200-day moving average is actually rising, and price is above that 200-day. Tengen-sen is above the Kijun-sen. The green line is above the red line there, and the Chiku span, which is the closing price, right, is above the candle 26 periods ago. That's the weekly chart. Let's look at the daily. There it is. Looks great. Nice big move. And, you know, yeah, it broke through. Go back in time. You can see that high right there. That's from 2020. And, you know, the interesting thing about GDXJ, because it's the junior gold miners ETF, smaller companies, okay? Here's a list of some of them right here. But basically, the next place where it's going to find resistance, we'll look at the monthly chart for a moment. And you can see that at one time, GDXJ was at $179.44. So it's actually dropped quite a bit, right? Like if we were to measure from around that level there down to these lows here, we're talking about, you know, 90% drop. And now, since that low, it's actually moved up approximately 279% from 2015. Okay, around 2015, 2016. It's been doing pretty good, and it's breaking levels, and that's the most important thing. Now I think it's the next level of resistance is going to be that prior high of 102.68, and that is approximately 32.6% away. So this is not a bad, bad place to be. Gold mining is looking strong here. Okay, guys, that's going to do it for this video. Remember, if you want to support the channel, what you want to do is, one, definitely hit that subscribe button. It's free to do that. Hit the notification bell so you know when my videos are popping up. You can find them in the subscription section. And then, of course, consider joining for the exclusive member-only videos. Here's the one that I just did. And it's like 56 minutes long, if you can sit through that. All right, and here's the list of all the member videos that I've done in the past. So there's a lot of videos in there for you anyway. And I even have some day trading videos for legend level members. You can access those too. All right, have a good rest of the night. I will catch you all in the next one.